Hey guys, this is Claudia here from the Bookkeeping Experts. I've been a bookkeeper for a long time, as most of you know, about over 20 years or so. I am a pro advisor certified professional, and I've been using QuickBooks for a long time. I started with desktop, and then eventually I merged into QuickBooks Online. And I love the fact that I can work on my client's book pretty much anywhere. So that's the advantage of QuickBooks Online. It's cloud basis and it's getting better and better. So as most of you know from prior videos, I did post the updates on Square updates, and I did post some videos on PayPal and so on and so forth. And even though the synchronization between the apps and QuickBooks sometimes is not perfect, and you will get some errors sometimes, but it's getting better and better. So as you know, and but today we're going to talk about a different subject. We've been talking in the past 3 videos, which is errors, or whatever you want to call discrepancies on the profit and loss or income statement. What is the profit and loss? Well, basically, the profit and loss is the most important financial statement for your firm for the current year, because it gives you all the details. What's going on with your business means how much are you spending, how much are you making, and what's your bottom line for the year. So income and expenses and the bottom line. So that's what the income statement is all about. We're gonna also talk about the balance sheet in the future, not today. And what do we look for when we open the balance sheet, right? Same thing with the profit and loss. So when I'm meeting with my clients, the first thing we want to take a look at is the overview. The overview, I'm gonna look first of all. I'm going to check if the account have been reconciled. This is just a simple account, so it has not been reconciled. But you want the accounts to be categorized and reconciled to the most current date. In this case, we have a lot of transactions that have not been accepted, and it's for a purpose, because this is a learning account, or so that we can just use as a sample. So that's why I update that, so we can learn. Other things that we're going to look at is undeposited funds, which in this case is cleared, but that could be the biggest nightmare for most business owners, because they skip a few processes on the workflow of QuickBooks. So that's why you find undeposited funds. And by the way, I have several videos on the subject, and you can go back and watch them if you have any questions. Uncategorized assets, you want to make sure that this is 0, and usually, basically, uncategorized asset is when there's some kind of income, a transfer, or whatever, and it's not categorized correctly. It's just sent as uncategorized asset, and most of them are transfers, or it could be a payment to a credit card, or whatever it is. So you basically, from here, you can actually open, or you can just access the uncategorized asset from your balance sheet. Okay, so uncategorized income is going to be on your profit and loss. The undeposited funds is going to be on your balance sheet. So uncategorized income, we covered that before. So it's income that has not been matched to a deposit. Most of the time it's just that it was just added, but it wasn't categorized whatsoever. Once again, with income, if it is sales, and if you have an app, or if you invoice your customers, those transactions will always be matched in banking. You don't want just to add them. So if not, it's going to create uncategorized income, undeposited funds, and all that not fun stuff. All right, so uncategorized expense, same thing as uncategorized income. And as a bookkeeper, sometimes at the end of the month, we have to reconcile all the credit cards and the bank statements. There are times when we add the income that has not had any detail as uncategorized income and uncategorized expense, so that we can actually reach out to small business and ask, or the business owner, and find out about those specific transactions. So ask them, so what's going on here? So what is this money? Where's this money coming from? Or what was this expense? Uncategorized expense, usually if there's any checks, there's no details on the checks in QuickBooks. So we may put in uncategorized expense, and then we reconcile the account to make sure everything is matching. And then we do reach out to the business owner to verify what those transactions are. Now, with uncategorized income, you do not want to add them and to reconcile the account, just to reconcile the account. And the reason why is because with income, you always want to match to a deposit. That's the right workflow. So you enter the invoice, you enter the payment, and send to undeposited funds, record the deposit, and match it in bank. So it's always going to be matched. That's what we want, right? And I can actually may show you that. Okay, so but those are two mistakes that we are. It may not be a mistake, like I said. It could be that it was added there for a purpose, so that we can go over with the business owner and find out what those are, right? Okay, so we want to find out about accounts receivable. There are more than 90 days. Verify if there aren't any invoices over the 90 days, if it is really owing, or if the workflow was not followed and those invoices was actually paid. So it's very important for us to go through the accounts receivable to make sure that it's all accurate. Accounts payable, same thing. If there is anything over 90 days, we want to take a look. Maybe it was already paid, but nobody matched it. So with the accounts payable, if you do enter a bill, you want to make sure that you record the payment on the bill as well. Because if you don't record a payment and match it in banking, it will create, or that accounts payable will stay open, and it will create an error, because basically you added the expense directly from banking without matching, and then you have that open bill in your system. Opening balance equity. This error is created when you close an account that has a balance in it, or when you open an account, or even enter inventory or product, or you enter product in inventory, and you just enter a beginning balance. You don't want to add a beginning balance in there, because if you do, this is what's going to create an error. In this case, how to fix it? You can just do a journal entry for the amount and transfer from opening balance equity into owner's equity. But you definitely don't want anything on opening balance equity. That should be always a zero balance. So those are the things that I'm going to look at. And as you can see, because this is a sample account, I left quite a few errors in here so that we can observe them, since this is a sample account. And finally, we're going to take a look at some negative assets and liability account in the balance sheet. So here it says that I have 3 of them. In this case, I would open them to verify which ones are the negative accounts. Now, okay, let me go back here. Overview. Okay, so it's actually saying checking, opening balance equity, view all. Okay, it's right here. So we have opening balance equity, owner's pay and personal expense, and we have the credit card here. Now, what does it mean to have a negative amount on the owner's pay? So it means that you're paying yourself. So it's fine that it's negative here. So if you are distributing money from the company to yourself, then there will be a negative amount on the owner's pay and personal expense. So that would be fine. On the opening balance equity, like I said, you should zero out this amount and you're going to do it with a journal entry. And on the credit card account, here we have a negative amount, means that we have more payments than expense. So basically what it's saying is that you're overpaying your liability. Sometimes you may see that negative amount on a liability account. And what it means is that probably the liability has not been entered. So I have clients who had that, we were recording the payments to a car payment, but the car itself was not entered in the books, or the car liability was not entered in the books. Neither was the car. So what we needed to do is do a journal entry with the beginning, or with the value of the car, and with the liability, opening the liability. So we would debit the asset and credit the liability, like the bank account, or the truck loan or car loan, whatever it is, right? So those are the ways to fix those items. But going back to the overview, okay, so those are the most important parts to take a look at. So common issues on the profit and loss, the main thing is going to be the uncategorized income, the uncategorized expense, and for here, that's it, those two. And also unapplied cash payment, which is going to be also on the profit and loss, right? Okay, that would be it. And then we're gonna, like I said, we're gonna cover the discrepancy that you can find on the balance sheet. So that is very important to take a look at. And we look at that every month. So this is pretty much the process. And as a bookkeeper, you'd have some, if you are a bookkeeper, on the left hand side, you'd have a month-end review where you're gonna go through all the details. And on the next video, we're gonna cover that. But as a business owner, this is where you're gonna look to see what kind of task does your book need in order to get cleaned up. So overview, common issue. Those are the two accounts we are looking at on the profit and loss. Those are all balance sheet accounts. So except for those two, everything else here is going to be balance sheet accounts. Okay, so I want to cover with you how we do a journal entry to correct a discrepancy. Okay, so that's the opening balance. We usually would click on the details here to find out what that is. This was a credit card. That's when the credit card first got added into QuickBooks. So it was a prior balance, and we're gonna zero it out in the system. Okay, so we're gonna do a journal entry. Oh. Okay, sorry, my mouse is not working. There it is. Journal entry. We're gonna date the journal entry to whatever date we had. So I actually didn't write it down, so I'm gonna go back here. Overview. What was the date? January 1st, 2021. So one thing you can do if you want to make your life easier, you can bring your mouse all the way to the top on the tab where it says, QuickBooks, right on the top, not on the address bar, but above that. You can right click it and you can duplicate your page, and you can go back and forth. And I use this a lot when I'm fixing issues or discrepancy on the financials. Okay, so this way I have the information here, and I can do my journal entry on the first one. And once again, my silly mouse is not working. There it is. Okay, I'm gonna change the date here. Oh boy. mouse is acting up today. We're going to put for this same date. And we want to click on the line, which is on the account. Okay. There it is. It is giving me a hard time. Okay, so we're going to reverse that balance sheet. Now, keep in mind that balance sheet is actually a negative amount. So I'm just going to, in order to remove that negative amount, I'm going to debit 1888.80. Okay, so that's no. We're going to credit, 1888.80, because that's a balance sheet account. Okay, and then we're going to debit another equity account. Some people prefer to put on retained earnings, and some CPA prefer to create an account called owner's equity and keep it there. I prefer to create a separate account. There are some CPAs that prefer just to put on retained earnings. I don't, because I don't like to mess up with retained earnings, because retained earnings is basically a history of the income of your firm through the years. So you don't want to mess it up. Want to keep that whatever it is that we had before. So it is an equity. We're creating a new account. So we're creating an equity account. Like I said, it is an owner's equity. I'm going to leave it as the owner's equity. Okay. And automatically, this is a journal entry. It's going to populate on the opposite side. So basically, I have a credit and a debit. We have two. In the journal entries, we always have two entries. Okay, it's always going to zero each other out. So in this case, I am crediting opening balance so that I can increase, because it's a negative amount. And we're going to debit the owner's equity. So we have the date here. Everything looks fine. We're going to save it. Okay. Oh, now I have a zero balance on my opening balance equity, and that's exactly what I want here. Like I said, this is created usually when you enter a new credit card, or when you enter inventory in products and service, and you enter a beginning balance. That's where you have that opening balance equity. That's how it's created. But you want to zero it out. Okay. So this is it for today. Kind of to understand how to have an overview of what you have to do on your books to clean it up. One of the most popular challenges that business owners have is it's understanding the whole process of QuickBooks, especially with income transactions. Especially if you have an app that is synchronized with QuickBooks. Sometimes there's a lot of challenge that can create duplicate transactions, so on and so forth. We have some videos that we cover those issues, but if you have any particular question in regards to this part, write it down below. Write it down. I actually take the time to read all the questions and answer them right away. So, hey, I'm here for you. So write it down, write the questions. I'll go ahead and answer. And if you have any subject that you'd like to address on the next video, go ahead and write it down there as well. So we will be covering in the future on the next videos, balance sheet. Well, I don't like to call mistakes or errors, because it could be discrepancies, right? It's just discrepancy for, like I said, for whatever reason, there are things that are incorrect and we need to correct them. So if you like this video, subscribe to our channel. We'll be back soon. And if you subscribe, you're going to be watching the most updated information that I bring it up weekly. So want to see the latest video? Subscribe to our channel. Also, like this video so that we can continue bringing videos like that to make your life easier with QuickBooks Online. That's my goal, to help you understand, make your life easier, and grow your business by understanding your financials. Thanks again for watching our videos. I look forward to see you next time. And until next time, keep on smiling.